All right. Good evening, everyone. My name is Sekola Lair of Sekola Lair Real Estate, powered by EXP. I'm with the premier group of EXP, and I am joined this evening with a very special guest, Varney Jallah. He is the founder and CEO of Structured Credit Solutions, and he is here to talk to you about credit repair and all the myths that are out there about your credit. So we want to go ahead and get started. And he's also got a book out, right, Varney? You have a book.
Yes.
Yeah, so we're going to talk about that a little bit, but we're going to go ahead and get started because we're all about giving you relevant and relatable information. And so we're going to break this meeting or a conversation up into credit repair, down payment assistance, and giving you the broad strokes about the home buying process. So we're going to go ahead and start with you, Varney.
Thank you so much, Sekola, for that great introduction. Like Sekola said, my name is Varney Jallah. I'm the founder, owner of Structured Credit Solutions. I'm also the author of this amazing book that's available on Amazon, The Not So Secret Guide to Boost Your Credit Score. And so I'm just going to go right into it. I just want to share with you guys tonight just a quick presentation on how you guys can, the fastest way you guys can boost your scores, how you have full control over 550 points. So I'm just going to break down the different factors, how your scores are calculated, and each one of those factors, I'm going to show you how many points is in that category and how you can take full advantage of those points. Okay, so I'm just going to go ahead and get right into it. Do you guys know that 80% of your life's biggest decision will be determined by your credit score? Okay, if you're applying for a job, 29 out of 50 states will check your credit score. If you're applying for a mortgage, the determining factor if you're going to get approved for that mortgage will be your credit score. If you're applying for an auto loan, they're going to check your credit score. If you're a business owner trying to get capital for your business, your credit score will be the determining factor. So I want you guys to remember this tonight, okay? 35, 30, 15, 10, and 10. So Cole, if you can put that in the comment field for us. 35, 35, 30, 15, 10, and 10. 35.
Go ahead.
Yeah, 35, 30, 15, 10, and 10. Okay. 35% of your score, guys, is based on your payment history. Okay. So in that particular category, you have 192.5 points. Okay. So now I'm going into it on each category, how you guys can gain 550 points. You have full control over these points, not the credit bureaus, not the system, not the man. You guys have full control over these 550 points. Okay, so 35% of your scores is based on payment history. You have 192.5 points in this category. Okay, so simply, I want you guys to do this to take advantage of the 492.5 points in that category. I want you guys to take out a piece, get you a paper, write down all your bills. If you have credit cards, if you have student loans, if you have auto loans, anything that you're making a monthly payment on, I want you to write that down. I want you to contact the banks and set up an auto payment to have these payments come out of your checking account or come out of your checking account every month to make sure that you're not missing any payments. And the reason why I recommend that you guys set this up on auto payment, again, life can happen. You can be on vacation, you don't have access to internet, anything can happen where you forget to make your payment. And I've seen client score drop anywhere between 60 to 90 points or even 120 points just from a late payment. You can have a 700 credit score with one late payment. Guess what? If you're trying to apply for a mortgage, if you have one late payment on there, the banks will actually have you wait 6 months to a year. Okay. So to make sure that you take full advantage of that 192.5 points in that category, 35% of your scores, simply set up all your monthly payments on auto payment. Okay. So let's go ahead and go to the next part of your scores, which is 30%, which is utilization. Okay, utilization is 30% of your score. You have 165 points in this category. Okay, I'm pretty sure me and Sekola can go get into it later on different myths that's out there. But make sure when it comes down to utilization, utilization is involved with your revolving credit, which is your credit cards. Okay, you want to make sure that you keep your credit card utilization under 10%. Okay, I know there's some myths out there saying, hey, it's 30%, but you're actually leaving a lot of points on the table. You want to make sure that you keep your utilization under 10%. And here's how you guys can do that. Okay, so for example, let's say you have a credit card, the limit on that card is $1,000. Okay, the most you can put on that card would be $100. Anything over that will definitely start to pull your scores down. And here's how you can make sure that you're keeping your utilization under 10% every month. The banks will report that your utilization is under 10%. You want to contact your credit card company, right? I want you guys to remember these 2 dates, your statement date and your due date. Okay, so Cole, if you can put that in the comment field for me, your statement date and your due date. Okay, your statement date, they also call it your statement date, your reporting date, your closing date. You can usually find this date on your credit card statement, or you can simply contact your credit card company and say, hey, what day of the month do you guys report to the credit bureaus? And this is very, very important, guys. Contact your credit card company, say, what day of the month do you guys report to the credit bureaus? Okay, if the credit card company come back and say, hey, we report to the credit bureaus on the 15th of every month, you want to make sure that your credit card utilization is under 10%, because that's the day, the statement date is what they use to calculate your credit score. Your due date is what the banks use to calculate how much interest they're going to charge you. Okay, so if your statement date, your closing date, your reporting date is the 15th of every month, make sure your credit card utilization is under 10%, because that's the balance they're going to use to report to the credit bureaus, simply saying, hey, this is Joe Brown balance on the credit card, and that's what they would use to calculate your scores. So that's what those dates are very, very, very important. Okay, your statement date is what they use to calculate your credit score. Your due date is what the banks would use to calculate how much interest they're going to charge you. Once you start carrying your balance from month to month on your credit cards, that's when you start to pay interest. But if you pay off your credit card balance by the due date, you don't have to worry about paying any interest. Okay, let's go ahead and move on to the next factor of your credit score. 15% is your credit age. Okay, simply if your credit age is 5 years old or 6 years old, there's nothing really much you can do about it. When it comes down to that, it's just one of those things. In that specific category, you have 82 points. That's in that category. It's just one of those things that's simply just going to grow over time. Okay. The next factor we're going to get into will be your credit mix, which is 10% of your scores. You want to make sure you have a nice mix of revolving credit, which is credit cards. You want to make sure you have a nice mix of installment credit, which anything that has a fixed payment. It can be your auto loan, it can be your student loan, it can be your mortgage, it can be a personal loan. Anything that has a fixed payment is considered installment credit. Anything that has a payment that can change from month to month will be revolving credit. You want to make sure you have a nice mix of that. In that category, you have about 55 points that's in that category. Okay. The last and final category will be your inquiries, okay, which is 10% of your scores. Okay, in that category, you have another 55 points that's in that category. You want to make sure that you keep your inquiries to at least 2 to 3 every couple of years. Okay, so what exactly is inquiries? Every time you apply for anything, it could be an auto loan, you can be you're applying for a credit card, you're applying for a mortgage. Anytime the banks have to pull your credit score, that is considered an inquiry. Okay. Another thing out there is I noticed when people do what they call, when you go to the dealership and you're shopping around for a car, and they usually come back the following month, you'll probably see about 10 different inquiries on there. Okay. Don't be alarmed with that. It's just simply those 10 inquiries, it still counts as one inquiry, because the banks or the system, the credit bureaus consider that to be what they call rate shopping. Even if you're shopping for a mortgage, I usually encourage my clients to usually shop around at least to 2 or 3 different lenders. Okay, even though it's going to show up on your credit report as 3 different times they pull your credit score, but as long as you doing that rate shopping within 30 days, it's going to be counted as one inquiry. Okay, so if you take all those different factors in that inquiry section, you have about 55 points. And if you take each one of these sections that I just broke down for you guys will have full control over 550 points. Okay, so I just wanted to do that quick presentation for you guys, just to simply break down these different factors and different things that you guys can do to make sure that you're taking full advantage of that 550 points.